Hello guys, today we'll be starting with the next problem in our insolvency of partners, that is when one partner is insolvent in the firm. I'll go through the question. X, Y and Z that we will be solving today is illustration 5. Let us go through the question. X, Y and Z were partners sharing profits and losses equally, that is 1:1:1. They decided to dissolve the firm, on which the date their balance sheet was as follows. Now, the change in this question is you have current accounts along with capital accounts in the question. Current accounts along with capital accounts. When you have current accounts along with the capital accounts, what you have to do? You have to make all the adjustments wherever you have to make it for capital accounts, that is distribution of reserve fund or distribution of loss of profit and loss account, or any adjustments regarding partners capital accounts have to be all done to where partners current accounts itself. Yes, is that clear? That is the only difference in this problem. And here you have provision for doubtful debts, 8,000 minus 500, 7,500. You can either take directly 7,500 on the debit side, or you can take 8,000 on the debit side and 500 on the credit side. I'll explain you how. Okay, so this is balance sheet. In the balance sheet you have capital accounts as well as current accounts. Now, which partner is insolvent? Yes, the assets realized are as follows. You have assets realized data. The cost of dissolution 1,500. Cost of dissolution. Z became insolvent and could not contribute anything towards his capital deficiency. He could not get even 1 rupee from his side of private assets. So Z bought nothing cash to the business and he is the person insolvent. Prepare the necessary accounts to close the firm using Garner versus Murray decision. Yes, now we shall move to solution part of the problem. Yes, what is the first account we have to prepare? It is realization account. It is a common thing again. Transfer all assets on the debit side, liabilities on the credit side, assets realized credit side, liabilities paid debit side, and balance the account. You will be getting realization loss 9,000 rupees and 9,000 distribute to partners current account, because you have current account balances given in the question. You have to distribute the loss to partners current account, that is 3,000, 3,000 and 3,000. I have told you debtors, there is a provision for doubtful debts 500 rupees. Instead of 8,000 you can directly write it as 7,500, or you can go for 8,000 and put provision for doubtful and bad and doubtful debts as 500 on the credit side. When you write 7,500 directly here, you need not put this. Understood? So as of now we have taken 8,000 debtors and provision for doubtful debts on the credit side. So this is realization account. We have loss on realization which is transferred to partners current account, not capital account. Yes. Now next part of our problem is partners current account. It is not partners capital account. First we have to make adjustments to partners current account, then move to partners capital account. Yes, partners current account. What are the things you have to do? Get the balances. Balance brought down current account balances. It is given in the question. Debit balance of X and Y and credit balance of X and Y and debit balance of Z. And then you have reserve fund, share it among the partners, profit and loss you have. So share it among the partners, realization loss, get it to the partners current account. And then next part, in insolvency of partners, I am telling it again, if there is any realization loss, the solvent partners have to bring in cash equivalent to realization loss in their partners capital account. As we have current account here, so adjustment is made to partners current account. So realization loss share of X and Y is how much? 3,000, 3,000. So by cash, how much they are getting? 3,000 and 3,000. After making these adjustments, now what you have to do? Close partners current account and transfer this partners current account balances where? To partners capital accounts. So when you close partners current account, Z is showing what? Debit balance. So it is deficit on the credit side. It is transferred to Z's capital account, and X and Y are showing credit balance. So it is transferred to X and Y account. Now after partners current account, it is we have to prepare partners capital account. Now bring the balances of capitals and even transfer the balances of current account. Balances of capital is 20,000, 10,000 and 3,000. Balances of current account we are transferring by current account. X and Y as they showed credit balance, it is transferred on credit side. Z as it showed debit balance, it is transferred on debit side. Now the last step in partners capital account. What I have told in the previous questions, the same thing repeats here. Leave some 3 to 4 lines space and go for writing down of working notes. How many working notes do we have? We have 3 working notes here. So first working note. What is first working note? We have to calculate who is insolvent partner in the question. Z is insolvent partner. So we have to calculate capital deficiency of Z in the question given. How do we calculate? Debit side of total. What is debit side of total? 9,000 of Z account. Credit side of total of Z account is 3,000. So 9,000 minus 3,000, how much do you get? 6,000 rupees. So 6,000 rupees is capital deficiency of Mr. Z. Next, capital ratios of X and Y. X and Y, as you have current account given in the question, you need not adjust profit and loss account and reserve fund balances to capital balances. So it is what? It is fixed balance. It is not fluctuating balance. Fixed balance, whenever in the question it is given as current account, assume it to be fixed balance given in the question. Yes. So what is capital balance of Mr. X? 20,000. Capital balance of Mr. Y? 10,000. So what will be the ratio? 2:1. Now last working note. Working note number 3. Allocation of capital deficiency of Mr. Z to Mr. X and Mr. Y. This 6,000 should be allocated to X and Y in the ratio of 2:1. So Mr. X 6,000 into 2 by 3, 4,000. Mr. Y 6,000 into 1 by 3, 2,000. This you have to make adjustments in partners capital account. Now after allocation, I have told you have to fill in partners capital account. How do you do that? How much is Mr. X paying by Mr. X account? How much is Mr. X paying? It is rupees 4,000. Next, by Mr. Y account. How much is Mr. Y paying? It is rupees 2,000. So total of Z is 9,000 and 9,000. The corresponding entry we have to make it on debit side to Mr. Z account. How much is X paying? 4,000 rupees. And how much is Y paying? 2,000 rupees. And Z nothing. So now take the totals and balance the partners capital account. Total of Y is 12,000 and total of X is 23,000. Now 12,000 minus 2,000, 10,000. 23 minus 4,000, 19,000. What is this? Cash to be paid to X and Y. So to cash balancing figure. Total of X column is 23,000 and total of Y column is 12,000. With this we completed our partners capital account. Understood? So next what we have to do is cash account, that is last account. Yes, cash account is the last account. I have told you it will be the same thing. Wherever it is affected as cash, in the previous accounts whichever we have prepared, everything will be transferred to cash account. Balance of cash account 1,000 rupees. Assets realized 31,500. Realization in the realization account, liabilities paid 8,000. Realization expenses paid 1,500. By X's capital account and Y's capital account, that is cash to be paid, balancing figure in capital accounts 19,000 and 10,000. Next, it is two current accounts X and Y. Realization loss bought in by X and Y. What is this? Realization loss bought by whom? X and Y in their current accounts. We have made, if you cross check you will come to know this. So 3,000 and 3,000. If you take total of cash account and it is tallying, that means your problem is right.